Hello everyone, my name is Rich Stocks and welcome back to another video. In this video, I'm going to be covering my entire stock portfolio, not crypto, stocks. This is the very first investment I ever got into and how I'm making passive income with this. And I'm going to show you exactly how to do it step by step, full transparency on exactly what I am doing to make passive income with stocks in the stock market. So if you like any content I post on this page, please like, comment, subscribe. Enough of me blabbering on. Let's get right into it. Okay, so I'm gonna now open up my Wealthsimple Trade account. So this is my trading account. I'll have a link actually to this website in the description below. You'll get a free stock when you sign up, and it's commission free. It's just like Robinhood, but I prefer this personally because they never halted trading. I personally love it. So I'm in the trade and crypto section. They actually do have crypto on here, but I'm not going to be covering that because I'm just doing stocks on here. So I have $20,000 in here. I started this account about 2 years ago when I was 18. I'm 20 years old right now. So this account has been growing quite solidly over the past 2 years. I have my personal account. Kind of ignore this. This is like my risky bet. As you can see, it's down $145. This is my Wall Street bet plays, so I'm just gonna ignore that. I'm gonna go right into my TFSA, which is in Canada, which is where I live. It's a tax-free savings account, so any gains I make on here are tax-free. Obviously, there's a limit to how much you can put in here, but you can figure that out if you're Canadian, just like me. So you can see actually in the past month, I'm up 5%, which is $908. And today I think I was down like $100 today, whatever. You can take a look into my stock portfolio. You can see I have a lot of good plays and some pretty bad plays. You can see like BlackBerry and Clean Energy. Those are both stocks I bought off of Wall Street Bets, so I'm just going to ignore those. But I'm going to get into actually what I'm doing to make passive income in here. So, because you can buy and sell a stock and make money. Everybody would know that, but not everybody knows about dividends. So what a dividend is it's a portion of profits that a company pays out to their shareholders. And I can actually go over here to my account and filter by my dividends. You can see each company, for example, VDY, which is a Vanguard dividend yield index fund. I got paid $1.40 November 8th. So it was actually 2 days ago. I got paid $1.40 dividend from this. This company actually pays monthly. REI, which is a real estate company, $2.24. ZWC, another index fund, $18.60. This one also pays every month. So you can see all of these companies pay dividends, all these amounts here. It might not seem like a lot, but this adds up over time, especially if you're getting paid passively and you don't even know that you're getting paid. This just builds up over time, right? This will go on forever. So I can actually show you my dividend spreadsheet where I started tracking them ever since I bought my very first stock in October of 2019 with CM or CIBC Bank in Canada. I got paid $1.44 from that stock. That was my first ever dividend I ever received, and then followed by two other ones which total up to $4.78 for the total of October. So me receiving $4.78 of passive income for my first month ever was amazing to me. I was astonished to even get passive income from stocks like this. But as you can see, $3.11, like, okay, I earned less. $2.04 earned even less. Then I started diversifying into bigger and better stocks. Then my next month was $14.11, $8, $15, $16. So most of the stocks I have in here will pay quarterly, which is every 3 months, and some pay monthly. You can actually just research the stock on Google and it'll tell you if it pays quarterly or monthly. That's how I find out how often the dividend stock pays. So if I go over here, you can see actually in some months I got $30, over here I got $44. You can see there's big spikes every 3 months. It's because those are the stocks that pay quarterly. And I think the biggest one I received here was $66 in October, so it was last month. $66.02 in October, all in passive income, which totals up to $817.78 in complete passive income over the course of about 2 years, which I know probably sounds horrible that I only made $817 in 2 years, but that is just off of pure dividends, which is all passive income. I didn't have to sell a single stock or buy any more stocks to earn that money. So now I'm going to go more into stocks that would actually pay good yields. So I live in Canada, so I focus on stocks that are in Canada that pay a high dividend yield. For example, here if I go to my TFSA and scroll down to probably one of my favorite stocks, which is ZWC, which is a Canadian high dividend covered call ETF. This one I'm up $477 on, and it pays almost a $20 dividend every single month, which is fantastic, right? So what I do to find out this information is go over to Seeking Alpha. For example, I'll go over to right here I own BMO. I'm up $82 on this stock, and it pays a pretty nice dividend every 3 months. So for example, if you want to figure out more information about the stock and the dividends that it pays, you can go over to Seeking Alpha. I'll have a link for this down below. It's a completely free stock researching website. I'll just type in BMO, which is the ticker for this stock, Bank of Montreal, and you can go over to dividends, and you scroll down, it'll tell you the dividend yield, the annual payout ratio, and dividend growth. So something really, really important you want to look for in a dividend paying stock is the dividend growth. If it has like a long years of dividend growth, so 6 years is actually pretty good, but some companies, I think Triple M, this company has an insane look at this, 63 years of dividend growth. Man, if you're gonna buy a company, this is the kind of company you want to buy. 63 years of consistent dividend payout. The reason I don't buy this is because Canadians get subject to taxes off dividends from American stocks unless it's in an RRSP. So that's why I'm not buying American stocks. I'm sticking to Canadian stocks. But if you're in America, man, I would grab this stock in a heartbeat. 63 years of dividend growth. Like, that's insane. That means it's consistently paid more over time for 63 years consecutively, which is crazy. It pays every quarter, so every 3 months. And it'll say the ex-dividend date. So something really important to also know is before you buy a stock, you want to make sure you actually get paid for that dividend. So ex-dividend date is 08/20/2021. So if you own the stock before this date, so you have to own it on the 19th or anytime earlier, you will get paid the dividend on this date right here. So about a month, not even a month, maybe 20 days later, you will get paid that dividend. Very, very crucial. You don't want to buy a stock and then realize you're a day past the expiry or a day past the ex-dividend date, and then you'll miss out on the dividend, which will suck, but at least you'll still own the stock, so you'll get paid on the next dividend. But this is a great tool to use. Always research the stock and the dividend before you go and buy the stocks. You want to make sure you get paid that dividend. Another topic I actually want to talk about that's regarding dividends and why the dividend investing is so important. One thing that someone told me is the dividend snowball. I'm like, what is a dividend snowball? So for example, let's say I got paid on this ZWC. I get paid about $18, $19 every month. I think last month it was, let me see here, $18.20. So let's say $18. I take that $18. That's actually almost the share price of the stock, right? I take that $18 dividend and I reinvest it back into the company. Now I have an extra share that I got for free, and they're going to pay me more next payout for the dividend. So I can take the dividend that I get paid, reinvest it back into the company that paid me the dividend, and then when I get paid another dividend, it's going to be more than what they paid me last time. So I could buy back another share, and they'll pay me back even more, and I could buy back another share. Eventually I could buy back 2 shares, 3 shares, 4 shares, and it's just going to grow so much to the point where you don't even have to put your own money in, and you can just reinvest all the dividends, which is what I've been doing actually for the past 6 months, because I've just been focusing on crypto. But I've just been reinvesting all of the dividends that I have in here. I think right now I have, I did sell a stock recently, but for play money, I got $544 in play money, but had maybe $20 in here previously, which is all from dividends, and I could buy another share of the ZWC, which is the dividend snowball. I have 187 shares of this, and I've probably only put in maybe 2,000, so maybe 1,000 or 1,500. That's growth and dividends, maybe a little bit of contributions here and there, but I look for dividend paying stocks that pay monthly. So usually real estate pays monthly, so O is actually one that I'm in. Realty Income, it is an American company. I bought this before I knew about the tax from dividends, but I'm just going to hold on to it because I'm up $36 on it. But this one pays monthly, and it's a real estate stock. So real estate stocks pay monthly. Most of them do. There might be some that pay quarterly, but most real estate stocks will pay quarterly or pay monthly. So make sure you can always look up the stocks on Seeking Alpha to make sure you get in at the right time, you get the right payouts. You see that this one pays quarterly. And if I went into O, if it which shows up here. Realty income, you can see that this one pays monthly. So it'll say right there, pays monthly. It's been growing for 24 years. So this would be another solid company to invest in. No, not financial advice at all. Do your own research, but these are stocks that I'm invested in and I am up on them, so I like the company. Over time, you will gain more money. You can actually see here, if I hover over my line here, the gray line is the money that I've put into my account, or yeah, that's the net deposits. And then the green line, which is actually going up, is the actual net worth of the stocks that I own. So for quite a while, I was actually down money. So back here, I was actually down like $1,000 or almost $2,000. And then it slowly started to pick up to the point where now it's profitable. And I haven't put any more money really in. So you can actually see my last deposit was way back here in June 15th. That was my very last deposit, and it's still growing. It went from being worth $18,700 to now being worth $20,000, and I haven't put $1 in since then, which is amazing. Which is why dividend investing is so important. You can just at least get some money in here, get your dividends started, get them starting to pay you out consistently, and then you can just let this sit on autopilot. You can even go, Wealthsimple Trade doesn't offer it, but some other applications and usually banks offer it, which is the DRIP or dividend reinvestment plan, which I'm doing through my bank. They will automatically take the dividends you get paid and automatically reinvest them into the company. So as soon as you get paid, it just goes right back into the company, which is amazing. So you could literally set this up and get stocks that pay dividends that you like, and then just forget about it for years. And you come back and your stocks will be worth so much more than what it's worth right now. Like almost, I guarantee you it will be, unless you buy some risky stock like BlackBerry. You buy something that's actually going to be worth your time, like an S&P 500 index, which is the one I'm obviously up the most on, which if you're going to buy any stock out there, I will always recommend a Vanguard S&P 500 index fund. Always choose an index fund that is safe and reliable. Over the past 5 years, it's going to grow over time. You can see we did have this big dip back here when COVID was a thing. Was this when COVID was a thing? I think so. Yeah, because the pandemic hit, stock market crashed, and then we hit all-time highs. So you can see, even if you invested back right when this dipped, when it was $62, right now it's worth $103. So it'd be $40 profit per share. You do the math if you bought quite a bit of shares. So this is always something you should buy. Even if no matter where you bought in this graph, you'd be up. No matter where you bought, you would have made money, which is why index fund is important. And finding an index fund that pays a dividend. So you can see right here, if I scroll down to yield, it pays a 1.2% every quarter. I'm happy with a 1.2% on my money, and on my money that I know is safe in an index fund. So guys, that is my brief overall view of stock markets, dividends, why I'm so passionate about dividends and dividend investing. So it's all passive income. It's so easy. You literally just have to set it up and you don't have to touch it again. You can just buy the stock and that's it. You could forget about it for life and you'll consistently be getting paid these dividends, which is life-changing. You don't have to do any work after you buy the stock. You just sit back and collect passive income all the time. And about Wealthsimple too, they send you a little notification saying, hey, you received $1.50 from blah, 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 whatever stock it is. And it's always a great message to see that, because knowing you just made money doing absolutely nothing. So on that note, guys, if you like this video, please like, comment, subscribe. Happy investing, everyone.